Hi guys, my name is Sahil and this is my Personal Finance Academy where I explain everything about money management in layman's language. Recently, I posted a video on top 18 large cap stocks and most of you requested a video on small cap and mid cap companies. So here I am with a video on top 10 mid cap companies with potential multi-bagger returns in the future. But before proceeding further, if you haven't watched the video on top 18 large cap companies, then I strongly recommend watching it. Guys, I love mid caps and I tell you the reason. First of all, they are not small companies, so they already have a proven track record. And since they are not so small, they are also not so volatile like small caps. On top of that, mid caps have ample room to grow and become a large cap. So they have better growth potential than large cap and lower volatility than small cap, which makes them a fine investment category. Although, as I said before, I still prefer to keep 50 to 60% of my money in large cap. And before we proceed, I want to inform you guys that I don't randomly pick any name from anywhere to create a video. I do an in-depth research on each company about its business model, management, product and services, competitive strength and key risk, financial strength on various parameters like growth ratio, profitability ratio, valuation, etc. And finally, I analyze the future growth prospect where I study the key trends in the industry and company's future plan. Now you might ask, why do I do all this? Because I am passionate about understanding various businesses and their future growth potential, and I love doing the number crunching. And I felt that there is a serious problem of proper knowledge due to which many investors end up losing their hard-earned money. This is the reason I have also created a complete course on money management. You can get the course details in the description box. In the future, I'll post an in-depth analysis of each of these top 10 mid-cap companies in my stock fundamental analysis series. Alright, now let's start with our list of top 10 mid-cap companies. Number 10 company on the list is Dixon Technologies. Established in 1993, Dixon Technologies started its journey with manufacturing of color television in 1994. Since then, it has expanded in manufacturing many electronics and lighting products under its portfolio, including mobile phone, CCTV camera, washing machine, LED lights, etc. In the last 9 years, Dixon Technology revenues have jumped from Rs 572 crore in March 2012 to Rs 5196 crore by December 20 at an exceptional CAGR of 27.7%. The profits have increased from -7 crore in March 12 to Rs 143 crore by December 20 at a CAGR of 75%. That's an insane growth number. Since its IPO in 2017, Dixon Technology share price has increased from Rs 2600 in September 17 to currently at 16,300 in February 21 at a crazy CAGR of 69% in the last 3.5 years. Currently, it has a market cap of Rs 19,000 crore. If you look at the future growth prospect, the future of Dixon is very bright. Factors like rising per capita income, higher disposable income, penetration of mobile across urban, semi-urban and rural regions have opened opportunities for doorstep delivery of goods and services which require uses of electronic products. Moreover, Chinese disruption and government initiatives like Make in India has attracted several global and domestic brands to explore the country's electronic appliances and lighting space and has created limitless opportunity for companies like Dixon Technologies. Number 9 company is Polycab. Incorporated in 1996, Polycab is India's largest manufacturer of cables and wires with a market share of 18% in the organized segment. It is also a fast-growing player in the FMEG, that is fast-moving electrical goods industry, including fan, lights, switches, geyser, cooler, solar products, etc. In the last 6 years, Polycab revenue have jumped from Rs 3,986 crore in March 2014 to currently at 8,018 crore by December 20. Again, a consistent revenue growth at a CAGR of 11%. The profits have increased from 89 crore in March 14 to 815 crore by December 20 at an exceptional CAGR of 39%. Polycab recently had an IPO in April 19 and since then its share price has increased from Rs 640 in April 19 to currently at 1285 in February 21 at a CAGR of 27% in the last 2 years. I think this is just the beginning of its growth journey. Currently, it has a market cap of rupees 19,000 crore. Guys, Indian government has a lot of focus on infrastructure building and digital revolution. So think this way, when you construct bridges, dam, building and houses, what do you need? When you build smart cities, what do you need? One of the most important requirement is cables and wires to transfer electricity. Another disruption in Indian economy is in the digital space. India is slowly transforming into a digital economy. One of the critical requirements in building the digital infrastructure is wires and cables. Polycab is the leader in wire and cable with 18% market share. Then you also need fan, switches, lights, switchgear, geyser, cooler, etc. India's structural drivers like rapid urbanization, rising income level, evolving aspiration, digital inclusion and increasing consumer awareness about safer and energy efficient product will drive India's consumption growth story in the electrical segment. I have already created an in-depth video on Polycab. Number 8 company is Tata Elxsi. Incorporated in 1989, Tata Elxsi is amongst the world's leading provider of design and technology services across industry including automotive, media and communication, healthcare. Tata Elxsi provides integrated services from research and strategy to electronics and mechanical design, software development, validation and deployment. It is helping customers reimagine their products and services through design thinking and application of digital technologies such as IoT, that is Internet of Things, cloud, mobility, virtual reality and artificial intelligence. In the last 10 years, Tata Elxsi revenue have jumped from rupees 411 crore in March 2011 to rupees 1747 crore by December 20 at a consistent CAGR of 16%. The profits have increased from 32 crore in March 11 to 335 crore by December 20 at an exceptional CAGR of 27%. Its share price has increased from rupees 125 in February 11 to currently at 2,820 in February 21 at an exceptional CAGR of 36%. Currently, it has a market cap of 17,000 crore. If you look at the future growth potential, the future is digital and technologies like connected vehicle, cloud-based IoT platform, automation, product design and artificial intelligence would continue to generate more demand. On top of this, as the world inches more towards digitalization, the demand for software development would continue to increase. This would continue to fuel the growth for Tata Elxsi. Guys, I have already created a video on Tata Elxsi. Number 7 stock in the list is Dr. Lal PathLab. Established in 1949, Dr. Lal PathLab is one of the largest diagnostic chain in India with almost 200 plus clinical labs and 3000 plus patient service center with an exhaustive range of pathology, radiology and cardiology tests. In the last 10 years, Dr. Lal PathLab revenue have jumped from rupees 237 crore in March 11 to rupees 1452 crore by December 20 at a consistent CAGR of 20%. Profits have increased from 29 crore in March 11 to 241 crore by December 20 at an exceptional CAGR of 24%. Its share price has increased from rupees 900 in December 15 to currently at 2,400 in February 21 at a CAGR of 21%. Currently, it has a market cap of 20,000 crore. If you look at the future growth prospect, according to the new research report, the Indian Diagnostic Service Market Outlook 2020, the diagnostic service market is expected to continue growing at 27.5% for the next 5 years. That's crazy growth numbers. Factors like increasing awareness about preventive healthcare and consolidation of diagnostic industry from unorganized to organized player would be the key factors for growth of Dr. Lal PathLab. Number 6 stock is Endurance Technology. Established in 1985, Endurance Technology is one of the leading automotive component manufacturer having a diversified portfolio of technology intensified products in the category of aluminum casting and machining. It also includes categories like suspension, transmission and braking system. It also includes end-to-end auto component services including design, development, testing, validation, manufacturing, delivery and aftermarket sale for a wide range of technology incentive auto component products. In the last 10 years, Endurance revenue have jumped from rupees 2,346 crore in March 2010 to rupees 6,915 crore by March 20 at a CAGR of 11.5%. The profits have increased from 4 crore in March 10 to rupees 566 crore by March 20 at a mind-blowing CAGR of 64%. Since its IPO in October 16, the share price has jumped from rupees 626 to currently at 1469 in February 21 at a brilliant CAGR of 22%. Currently, it has a market cap of 20,600 crore. If you look at the future growth prospect, India's automobile industry is the world's fourth largest automobile market. One of the biggest trends of 21st century is electric vehicles. Government has strong focus on building the electric vehicle ecosystem in the country, and every vehicle manufacturing company, including two-wheeler, three-wheeler and four-wheeler, would need auto components. Not only in India, there is a huge demand of auto component from all over the world, and that's where endurance comes into picture with a very bright growth prospects. Number 5 company is IRCTC. Established in 1999, IRCTC is Indian Railway Catering and Tourism Company operating in 4 business segments including internet ticketing, packaged drinking water, travel and tourism and catering. The biggest advantage of IRCTC is the monopoly in the market it operates. IRCTC is the only company authorized to sell railway ticket online. Only company to distribute packaged drinking water across all stations as well as trains in India. Only authorized entity to provide catering services in train. In the last 5 years, IRCTC revenue have jumped from rupees 1059 crore in March 15 to rupees 2275 crore by March 20 at a CAGR of 16.5%. The profits have increased from 131 crore in March 15 to 529 crore by March 20 at an exceptional CAGR of 32%. IRCTC recently had the IPO in October 19 at a price band of rupees 320. It opened at more than 100% listing gain and currently trading at rupees 1553 within 1.5 year. Currently, it has a market cap of rupees 24,800 crore. If you look at the future growth prospect, IRCTC has immense growth potential in every sector it operates. In ticket booking, there is huge growth in online ticket booking. Factors such as rising internet penetration, availability of low-cost data, affordable smartphones, increasing uses of debit card and credit card and other online payment will augment growth in this sector. In drinking water category, increasing awareness about the importance of safe drinking water to maintain good health along with rising per capita income is creating a demand for bottled water in India. In travel and tourism sector, there is huge growth in both domestic and international tourism. IRCTC is aggressively foraying into rail-based tourism and has made tie-ups with various hotel and other tourism companies. In catering, there is a high demand on quality food and the growth is driven by urbanization, rising income level, internet penetration and various choices of cuisine in India. Number 4 company is Mindtree. Founded in 1999, Mindtree is in the business of information technology. It is a part of L&T Group. The company deals in e-commerce, mobile application, cloud computing, digital transformation, data analytics, testing, enterprise application integration, and enterprise resource planning. In the last 10 years, Mindtree revenue have jumped from rupees 1,509 crore in March 11 to rupees 7,909 crore by December 20 at a CAGR of 18%. The profits have increased from 102 crore in March 11 to rupees 999 crore by December 20 at a CAGR of 25%. Its share price has increased from rupees 100 in February 11 to currently at 1688 in February 21 at an exceptional CAGR of 33%. Currently, it has a market cap of 27,700 crore. If you look at the future growth prospect, we all know that the biggest theme is digital. Be it any sector, technology would be a key differentiator. E-commerce is the future of retail, UPI and online payments are future of banking, machine learning and automation is the future of manufacturing, and the list goes on. Themes like cloud computing, machine learning, automation, advanced analytics would continue to grow and companies like Mindtree would continue to grow. Number 3 company in the list is IFDC First Bank. In 2014, RBI granted the approval to IFDC Limited to set up a private bank in India. So IFDC Limited demerged to create IFDC Bank in 2015. Later, in 2018, IFDC Bank and Capital First Bank merged to create a new entity called IFDC First. So IDFC First is the newest member of the elite group of private banks in India. And guys, banking is one of the most profitable business segment. It is not easy to get RBI approval for private bank. In the last 4 years, IDFC First revenue have jumped from rupees 8,500 crore in March 17 to almost rupees 16,000 crore by December 20 at a CAGR of 16.8%. The profits have fallen from 1,019 crore in March 17 to minus 2,800 crore, and then it has recovered to current level of 423 crore by December 20. Now you might ask why I am suggesting a company with losses. The reason is my belief in the turnaround story of IDFC First. Earlier, IDFC had a major focus on wholesale banking, but now under the leadership of Mr. V. Vaidyanathan, IDFC First Bank is transforming into the retail segment. Mr. V. Vaidyanathan has an exceptional track record of founding and growing Capital First 10 times in a short span of 6 years before it was merged with IDFC. Guys, banking is the backbone of economy and every money transaction is via banks. So for the economy to grow, bank would play a key role. And IDFC First, being a small player, has a huge scope of growth for the next 10 to 20 years. Since its listing, the share price has fallen from the high of rupees 80 in October 16 to currently at 48 rupee. And that's where I see immense upside potential in the long term. Currently, IDFC First has a market cap of rupees 27,000 crore. Number 2 company in the list is Relaxo Footwear. Established in 1976, Relaxo Footwear is in the business of manufacturing affordable and quality footwears including slippers and shoes. Started with just one product, the Hawaii Chappal, today Relaxo manufactures 400 different types of shoes and slippers. Some of the popular brands of Relaxo include Relaxo, which is an iconic brand of Hawaii slipper, Bahamas, Spark and Flight. Relaxo produces over 7.5 lakh pairs of footwear every day. In the last 10 years, Relaxo revenue have jumped from rupees 554 crore in March 10 to rupees 2,410 crore by March 20 at a CAGR of 16%. The profits have increased from rupees 38 crore in March 10 to rupees 226 crore by March 20 at a CAGR of 20%. Its share price has increased from rupees 14 in June 11 to currently at 887 in February 21 at an exceptional CAGR of 55%. And it is one of the biggest wealth creator of Indian corporate history in the last 10 years. Currently, it has a market cap of rupees 22,000 crore. Over the period of time, footwear has evolved from being a mere necessity to an important fashion accessory. With growing urbanization and ever-increasing penetration of internet, the buying behavior of Indian consumer is changing rapidly. Now even the consumer from tier 2, tier 3 cities and rural market have become brand-centric. Aspiration for latest global trends has increased the frequency of shopping. This trend would continue to fuel the growth of Relaxo Footwear. Number 1 company in the list is Estelle Polytechnic. Established in 1996, Estelle Polytechnic is one of the fastest growing piping companies of India with a comprehensive range of piping and adhesive. Estelle is one of the largest manufacturer of CPVC and PVC plumbing system used across industries. In the last 10 years, Estelle Poly revenues have jumped from rupees 402 crore in March 11 to rupees 2,677 crore by December 20 at a CAGR of 22%. The profits have increased from rupees 28 crore in March 10 to rupees 248 crore by March 20 at a brilliant CAGR of 25%. Its share price has increased from rupees 20 in February 11 to currently at 2000 in February 21 at an exceptional CAGR of 58%. And again, it is one of the biggest wealth creator of Indian corporate history in the last 10 years. Currently, it has a market cap of rupees 30,000 crore. If you look at the future growth prospect, the key trends include consolidation in industry from unorganized to organized market, government initiatives like Housing for All, Nal Se Jal, etc., and replacement of traditional and corroded iron pipes infrastructure of entire country with low cost and high quality plastic pipe would continue to fuel the growth of Estelle Polytechnic for a long time. Guys, I've already covered Estelle Polytechnic in stock fundamental analysis. So this is my list of top 10 mid-cap stocks with huge growth potential and become a true multi-bagger. Please note that there are many more good companies in the mid-cap space. I have tried to balance the stock allocation across various industries and tried to pick one from each sector. Also, this video is for educational purpose. Do not blindly invest based on this video. Next Sunday, I will post a video on top 10 small cap companies. So stay tuned and take care.